Hi everyone and welcome to the learning curve. In this video, I'll be looking at a third quarter review of the performance of the United States economy. Now, the United States economy grew by 4.3% in the third quarter of 2025, which exceeds most, if not all, forecasts for the quarter. I will be analyzing the factors that drove the US economy in achieving this growth performance despite higher tariffs and other constraints in the global economy. But before I do so, I'll be looking at how exactly is GDP calculated. GDP means gross domestic product, which is a measurement of the value of goods and services produced in a particular country within a period of time. So this is the main barometer that is used to calculate the size of an economy and also to calculate when an economy is growing and the percentage by which it grows. The most common and well-defined equation for calculating gross domestic product, which again is the total value of goods and services produced in an economy in a given period of time, is the expenditure approach using this formula. GDP equals C for consumption, plus I for investments, plus G for government spending, plus X minus M, where X represents exports and M represents imports. So X minus M represents net exports. So that's how GDP is calculated. A growth in any of these segments in real terms indicates that the economy is growing. So if consumption expenditure grows, if investment grows, if government spending grows, and if net exports grows in real terms, then the economy grows. If growth in any of these areas outweighs any declines that may have taken place in any of the others, then overall the economy has grown. So again, C represents consumption. Consumption represents private household spending on final goods and services, such as food, rent, cars, and medical expenses. It is generally the largest component of GDP, that is consumption. Then we have I. I represents, as I indicated, investments, business, which speaks to business investments in equipment, software, and factories, as well as spending by households on new housing construction. It does not include the purchase of financial products like stocks and bonds. Then we speak about G. G represents government spending, which is the sum of government expenditure on final goods and services, such as the salaries of public servants like teachers, doctors, nurses, military equipment purchases, and infrastructure investments. It excludes transfer payments like Social Security or unemployment benefits. Those are excluded from G. Then we have X, which, as I indicated, is exports, and it represents the value of goods and services produced domestically, that is within the particular country, and sold to foreign countries. While M is imports, which is the value of goods and services purchased from foreign countries. Imports are subtracted to ensure only domestically produced items are counted in the calculation of GDP, gross domestic product. Hence, we go to X minus M, where X minus M represents net exports. Typically, this is also noted as NX, which is the country's trade balance. If net exports is positive, then that contributes positively to economic growth, or the growth of GDP. In other words, economic growth is really the growth of GDP, gross domestic product in real terms. So if the net exports, which is X minus M, is positive, then that's a positive contributor to GDP. But if it is negative, then that's a negative contributor to GDP. Net exports, which is X minus M, will be positive if if the value of a country's exports outweighs or is higher than the value of the country's imports. That is when X minus M here, net exports would be positive, therefore contributing positively to GDP. The reverse is also true, which is that if the value of a country's imports is greater than the value of that country's exports, then net exports will be negative. X minus M here will be negative, which would have a negative impact on GDP. And that is why countries, as part of a country's growth strategy, aggressive focusing on exports and a positive trade balance is important to promote positive impact on the economy. So what you might find in some quarters or in some years is that C may grow and I might grow, but G and net exports might decline. So as to whether the economy grew or not will depend on whether the factors that grew outweighed the factors that declined. But a growth in any of these will have a positive impact on GDP. That is, if consumption grows, or investment grows, or government spending grows, or net exports grows, then that will have a positive impact on GDP. So this is how GDP is calculated. And so to calculate actual economic growth or growth in GDP, then the GDP in the past period is compared to the GDP in the current period in percentage and real terms. And if there's an increase in the GDP in the current period compared to the GDP in the previous period in real terms, then we say we have experienced economic growth. So let's now look specifically at what happened in the US economy in the third quarter rather, of 2025. Against all forecasts, the quarterly real gross domestic product, which we say is GDP, which is our measurement of economic growth, grew by an annualized rate of 4.3% at the third quarter of 2025, as shown here in this graph. Right here, 4.3%, which is higher than the growth in the previous quarter. And in the first quarter of the year, there was a decline in GDP, as shown here by the yellow graph that is dipping below the x-axis. So the yellow graph dipping below the x-axis represents economic contraction or decline, while the purple bars, which surge above the x-axis, represents economic growth. So here we see a 4.3 percentage growth in GDP in the US economy in the third quarter of 2025. Now I'm going to look at what really drove this performance. So the US economy showed surprising strength in the third quarter of 2025, with real GDP, as I indicated, growing at a robust 4.3% annual rate. This is, interestingly, the fastest pace in which the US economy has grown in 2 years, driven by stronger consumer spending, especially on services and vehicles and similar types of technology. Increased exports was also an important factor driving growth in the US economy in the third quarter of 2025, as well as higher government spending. And higher government spending. This is despite some headwinds like inflation and previous tariffs. The growth rate exceeded the forecast that was put forward by most economists. Most economists had expected the US economy to grow at about 3 to 3.25%. So this is a significant jump of over 1 percentage point above what was expected of the US economy. It must, however, be noted that much of this growth was driven by spending, consumer spending, C. That's the C component of the formula that I mentioned earlier here that is used to calculate GDP. Much of this growth was driven by consumer spending from high-income households. This, of course, leads to concerns about future growth, and lingering price pressures also remain. Here's another graph that sums up the progression of a GDP growth by quarter from 2021 to the end of the third quarter of 2025 to help you to put things in context in terms of how the US economy has been performing. Again, when the bar dips below the x-axis, it means that the economy has contracted. There have only been a few periods when the GDP has contracted in the US economy since 2021. So this performance in the third quarter of 2025 is quite impressive. The 4.3% annualized rise in GDP builds on the previous quarter, that is quarter two's 3.8% growth. And as I indicated, this significantly beat forecasts. There was a 3.5% increase in consumer spending. Yes, so there was a 3.5% increase in consumer spending, led by spending on healthcare and recreational goods, such as vehicles, particularly electric vehicles. So, high income, rich households bought a lot of electric vehicles in the third quarter of 2025, which contributed to the 3.5% increase in the consumer spending element of GDP. And there was also significant spending on other services by consumers. A smaller trade deficit, which is fewer imports and more exports, and increased government spending, especially on defense, also contributed to boosting the performance of the US economy in the third quarter. There also continued to be business investments, especially investments in AI and equipment to support the growth in AI. So these are some of the critical areas that contributed to the US economy growing by 4.3% in the third quarter of 2025 and thereby outstripping most forecasts. The graph that is displayed here gives a breakdown of the contributors in percentage points to the US GDP in the third quarter of 2025. The legends are outlined here, color coded. And if we look where my cursor is here, this is indicating how each component of GDP, which is enlisted here in the key, performed. We realize, for example, that private inventories, which is coded here using the orange, experienced a decline as it falls below the x-axis of 0.2 percentage points. But we look and we see significant increases, very notable increases in other areas. Exports here seen a significant increase, as well as despite the fact that there was an increase in imports, we also saw where exports outstripped imports and therefore had a positive impact on GDP. Now, in essence, we see that the third quarter showcased surprising resilience and consumer strength, but analysts remain cautious about the sustained momentum given inflation and household financial pressures. Slow wage growth, higher prices impacting lower income families, and the lingering effect of past tariffs could cloud the outlook for moderation in 2026. So in my next presentation, I'm going to assess what does the forecast say about the performance, the expected performance of the US economy in the fourth quarter of 2025, as well as the first quarter of 2026. So I hope you found this presentation to be very informative as we continue our journey in developing our understanding of all things economics, statistics, and mathematics. Thank you. Remember to like, share, and subscribe if you find these videos interesting.